I need you to forget everything you think you know about Warren Buffett, because what he's doing right now is the most unusual move of his entire 60-year career. While every investor in America is obsessed with AI stocks, while Wall Street is fighting over Nvidia and Microsoft, the greatest investor in history quietly got on a plane, flew 6,700 miles across the Pacific Ocean, and made a bet that shocked the entire financial world. Warren Buffett is aggressively buying Japanese stocks. Not once, not twice. He's gone back 4 separate times, increasing his positions each time. He now owns over $23 billion worth of 5 specific Japanese companies. And when asked about it at the Berkshire Hathaway annual meeting, Buffett said something he has never said about any other foreign investment. I wish we could own 100% of each of them. 100%. From a man who measures every word like a surgeon measures every cut. Now, here's what's going to change your understanding of global finance. This isn't just about Japan. This is about China. This is about a secret geopolitical chess move that positions Buffett to profit from what I believe is the single biggest wealth transfer of the 21st century. And by the end of this video, you'll see the board the way Buffett sees it. Let's begin. Why Warren Buffett keeps buying Japanese stocks, the deep analysis. First, let's establish exactly what Buffett bought, because these aren't random picks. When you understand what these 5 companies are, the entire strategy becomes crystal clear. Buffett invested in Japan's 5 great trading houses, known in Japanese as Sogo Shosha. Company number 1, Mitsubishi Corporation, the largest trading house in Japan. They deal in everything from natural gas to metals to machinery to food. Revenue, $150 billion per year. They operate in over 90 countries. Company number 2, Mitsui & Company, a global powerhouse in energy, minerals, chemicals, and infrastructure. They own stakes in iron ore mines in Australia, LNG projects in Mozambique, oil fields in the Middle East. Revenue, $140 billion per year. Company number 3, Itochu Corporation, Japan's most profitable trading house per employee, dominant in textiles, food, energy, and, here's the key, they have massive operations across Asia, including China. Revenue, $110 billion per year. Company number 4, Marubeni Corporation, specializes in grain, agriculture, power generation, and infrastructure. They are one of the largest grain traders on the planet. Revenue, $75 billion per year. Company number 5, Sumitomo Corporation, deep expertise in metal products, transportation, construction, mining, and real estate. Revenue, $53 billion per year. Now, add all of that up. These 5 companies generate combined annual revenues of over $528 billion. That's larger than the GDP of Sweden, Norway, or Argentina, and Buffett owns roughly 9% of each one. But here's what makes this move genius. Why these companies are perfect for Buffett. Lean in. Let me show you what nobody else sees, energy. When I analyzed why Buffett chose these specific companies, I found 7 characteristics that make them the most Buffett-like investments he's ever made outside America, and I've never seen anyone break it down this way. Characteristic 1, they're absurdly cheap. When Buffett first bought these stocks in 2020, they were trading at an average price-to-earnings ratio of just 6. 6. For context, the S&P 500 right now trades at a PE of 28. That means Buffett bought companies generating massive profits at roughly 1/5 the valuation of American stocks. For a value investor like Buffett, that's like finding a Rolls-Royce at a Honda Civic price. Characteristic 2, enormous dividends. All 5 companies pay consistent, growing dividends. Average dividend yield when Buffett bought? Around 4 to 5%. Compare that to the S&P 500 dividend yield of 1.3%. Buffett is getting paid 3 to 4 times more in dividends from his Japanese stocks than he would from American blue chips, and these dividends have been increasing every year. Characteristic 3, massive share buybacks. Japanese companies have been aggressively buying back their own shares, a practice that Buffett absolutely loves. Why? Because buybacks increase your ownership percentage without spending a single extra dollar. When a company buys back 5% of its shares, your 9% stake effectively becomes a larger piece of a smaller pie. Buffett's ownership is growing automatically. Characteristic 4, diversified revenue streams. Each of these trading houses operates across dozens of industries and hundreds of countries. They're not dependent on one product, one market, one customer. They're essentially mini Berkshire Hathaways, diversified conglomerates that profit from global economic activity itself. Buffett once said, "They're similar in some ways to Berkshire Hathaway. That is the highest compliment Warren Buffett can give." Characteristic 5. Real assets, not paper promises. This is critical. In an age of digital everything, software companies with no physical assets, crypto tokens backed by nothing. These 5 Japanese companies own physical mines extracting copper, iron, and rare earth minerals, oil and gas fields producing real energy, agricultural land growing actual food, power plants generating electricity, ships moving goods across oceans, factories manufacturing real products. In a world where inflation is eroding the value of cash and financial assets are potentially overvalued, real assets are the ultimate hedge. Buffett isn't buying stocks, he's buying the physical backbone of the global economy. Characteristic 6. Currency arbitrage genius. This is the part that made my jaw drop. Buffett financed his Japanese purchases by issuing bonds denominated in Japanese yen. Read that again. He borrowed money in yen, at nearly 0% interest, and used it to buy Japanese stocks yielding 4 to 5% in dividends. He's getting paid to borrow money. The dividend income more than covers his borrowing costs. And here's the brilliance. If the yen weakens against the dollar, which it has been doing, his yen-denominated debt becomes cheaper to repay, while his stock positions retain their underlying value. He created a risk-free carry trade at a scale that no other investor in the world could replicate. This is financial engineering at its absolute highest level. Characteristic 7. Corporate governance revolution. Japan has historically been criticized for shareholder-unfriendly corporate governance. But starting in 2023, the Tokyo Stock Exchange launched the most aggressive corporate reform initiative in Japanese history. They essentially told Japanese companies, "Return value to shareholders, or we'll delist you." The result? Record share buybacks, record dividend increases, unwinding of cross-shareholdings, improved capital efficiency, better return on equity targets. Buffett timed this perfectly. He bought before the governance revolution kicked in, and now he's benefiting from a structural transformation that's making his investments more valuable every single quarter. Segment 3. The China Secret. Full stop, complete pause, 4 seconds of silence, then speak with gravity. Now, everything I've told you so far is the analysis you might find if you're reading sophisticated financial publications. But what I'm about to tell you next? This is the layer that almost nobody is discussing. This is where Buffett's Japan bet transforms from a smart value investment into a grand strategic masterpiece. And it all comes back to China. China secret number 1. Japan is the anti-China bet. Let me explain what I mean. For the last 30 years, global investors poured trillions of dollars into China. China was the growth story. China was the future. China was where the money went. But something has fundamentally broken. China's real estate market collapsed. China's demographic trajectory catastrophic. Population declining for the first time in 60 years. China's relationship with Western capital deteriorating rapidly. China's regulatory environment unpredictable and hostile to foreign investors. China's geopolitical posture increasingly aggressive and isolated. Trillions of dollars of global investment capital that used to flow into China now needs a new home in Asia. And that home? Japan. Buffett saw this before anyone. While China's stock market has lost over $6 trillion in value since 2021, Japan's Nikkei index hit an all-time high in 2024, surpassing a record that had stood since 1989. 35 years of waiting, and it finally happened. Buffett's timing? Impeccable, as always. The capital migration from China to Japan is not a temporary trade. It's a generational shift. And Buffett positioned himself at the very front of the line. China secret number 2, the supply chain exodus. Here's a secret that corporate America is executing right now, but rarely discusses publicly. It's called China Plus One. Every major American and European corporation is actively reducing its dependence on Chinese manufacturing and building alternative supply chains. Apple is moving production to India and Vietnam. TSMC is building semiconductor plants in Japan and Arizona. Toyota, Honda, and Japanese automakers are reshoring production back to Japan. And guess who sits at the center of these new supply chains? Japan's trading houses, Mitsubishi, Mitsui, Itochu, Marubeni, Sumitomo. These 5 companies are the connective tissue of Asian supply chains. They control logistics, raw materials, energy, and infrastructure across the entire Indo-Pacific region. As companies exit chain, they need intermediaries, resource suppliers, and infrastructure partners. Japan's Sogo Shosha are perfectly positioned to capture this business. Buffett isn't just betting on Japan, he's betting on the reorganization of the entire global supply chain away from China. China secret number 3, the resource war. This is the one that keeps me up at night. China controls approximately 60% of global rare earth mining, 90% of rare earth processing, 80% of the world's solar panel production, 75% of global lithium-ion battery manufacturing, 60% of critical mineral refining. They have already begun weaponizing this dominance. In 2023, China restricted exports of gallium and germanium, critical materials for semiconductors and defense systems. In 2024, they escalated further, limiting graphite exports essential for EV batteries. Now, who is the only developed nation with the trading infrastructure, global mining relationships, and diplomatic network to help the West bypass Chinese resource control? Japan. Japan's trading houses have spent decades building relationships with resource producers in Australia, iron ore, lithium, natural gas; Chile and Argentina, copper, lithium; Indonesia, nickel, tin; Canada, potash, uranium; Sub-Saharan Africa, cobalt, rare earths; Middle East, oil, LNG. These companies own direct stakes in mines, processing facilities, and export terminals around the world. When the US government says it wants to de-risk from China in critical minerals, Japan's trading houses are the mechanism through which that actually happens. Buffett isn't just buying stocks, he's buying strategic control over the resources that will define the next century. China secret number 4, the military alliance factor. This is the most sensitive piece of the puzzle, but it's essential to understanding Buffett's full calculus. The US-Japan military alliance is now stronger than at any point since World War II. In 2023, Japan announced its largest military spending increase since 1945, a 60% increase in defense budget over 5 years. Japan is buying American weapons systems, F-35 fighters, Tomahawk missiles, advanced radar systems, and Japan is becoming the anchor of a new Indo-Pacific security architecture designed specifically to contain China's military expansion. Now, why does this matter for Buffett's investment? Because military alliances create economic alliances. As the US and Japan deepen their security partnership, trade barriers come down, technology sharing goes up, capital flows increase, joint infrastructure projects multiply. Japan's trading houses will be the primary beneficiaries of this deepening economic integration. Buffett has always understood that politics and economics are inseparable. His Japan bet isn't just financial, it's geopolitical. China secret number 5, the yuan versus yen currency war. This is the hidden dimension that almost zero financial commentators are discussing. China is actively trying to internationalize the yuan to challenge the dollar. But there's a problem. No major global investor trusts the yuan. China's capital controls, its opaque financial system, and its willingness to manipulate currency markets make the yuan uninvestable for serious institutions. So what happens? Global capital that's leaving China doesn't go into yuan-denominated assets. It goes into US dollars, treasury bills, which is why Buffett is also hoarding treasuries; Japanese yen, traditionally a safe haven currency; Japanese equities, newly attractive due to governance reforms and valuations. Buffett is positioned on both sides of this capital migration. He holds massive US Treasury positions and massive Japanese equity positions. Both destinations benefit as capital flees China. This is the grand strategy, and it's breathtaking in its simplicity and its brilliance. Segment 4, the bigger picture. Step back, panoramic view, historical context. Let me zoom out for a moment, because when you see this from the 30,000-foot view, Buffett's Japan investment tells you something profound about where the world is headed. We are witnessing the end of what historians will call the China integration era, the 30-year period from 1990 to 2020, where the global economy was built around the assumption that China would become a responsible, open, market-oriented partner. That assumption is dead. What's replacing it is a new era, the Great Bifurcation. The world economy is splitting into two systems. System 1, the US-led bloc, United States, Japan, Europe, Australia, Canada, South Korea, India, increasingly. System 2, the China-led bloc, China, Russia, Iran, North Korea, parts of the BRICS alliance. Each system will have its own supply chains, technology standards, financial infrastructure, currency arrangements, trade agreements. Buffett's Japan bet is a declaration. He's telling you which system he believes will win. He's telling you where the capital, innovation, and economic growth will concentrate over the next 20 to 30 years. And he's putting $23 billion behind that conviction. When Warren Buffett puts $23 billion behind a conviction, you pay attention. Coaching mode, direct, actionable, here's your playbook. Now, let's bring this home to your portfolio, because understanding Buffett's strategy is fascinating, but it means nothing unless you can apply the lessons. Here are 6 actionable takeaways you can implement immediately. Takeaway number 1, think globally. Most American investors have 85 to 90% of their portfolio in US stocks. That's called home country bias, and it's one of the biggest mistakes in investing. Buffett, the most patriotic investor in America, just told you that some of the best opportunities in the world are outside the United States. Consider adding 10 to 20% international exposure to your portfolio. Japan is a strong starting point. Takeaway number 2, valuation still matters. In a world obsessed with growth at any price, Buffett found companies generating massive cash flows at single-digit PE ratios. They're not sexy, they're not trending on social media, but they're making money, paying dividends, and compounding wealth. Never overpay. That's the lesson Buffett has taught for 60 years, and his Japan bet is the latest proof. Takeaway number 3, real assets over hype. In an AI-crazed market, where companies with no earnings trade at astronomical valuations, Buffett chose companies that own mines, ships, oil fields, farms, and factories. Physical assets that the world needs. Ask yourself, does your portfolio own things that have tangible value? Or is it filled with promises and projections? Takeaway number 4, follow the supply chain shift. The reorganization of global supply chains away from China is a multi-trillion-dollar, multi-decade trend. Companies that facilitate this shift in logistics, infrastructure, materials, and technology will generate enormous returns. Start researching companies that benefit from nearshoring, friendshoring, and supply chain diversification. Takeaway number 5, understand currency. Buffett's yen-denominated bond strategy is pure genius, but you don't need to replicate it exactly. What you should understand is that currency movements can dramatically impact international investments, both positively and negatively. If you're investing internationally, understand the currency dynamics. They can be your best friend or your worst enemy. Takeaway number 6, position for the bifurcation. The great bifurcation I described isn't a theory, it's happening right now. The companies, countries, and assets on the right side of this split will thrive. The ones on the wrong side will struggle. Make sure your portfolio is positioned on the winning side of history. The final thought, the moment that creates emotional connection. I want to leave you with something Warren Buffett said during his visit to Tokyo. A reporter asked him, "Why Japan? Why now?" And Buffett smiled, that famous quiet smile, and said, "When I find something that makes sense, and the price is right, I don't need to overcomplicate it. That's it. No complex algorithm, no artificial intelligence model, no team of quants running simulations. Simple analysis, clear thinking, rational pricing, long-term perspective. In a world that is drowning in complexity, noise, and distraction, Warren Buffett just flew to Japan, bought 5 businesses he understood, at prices that made sense, and positioned himself for the next 30 years of global economic reality. While everyone else was arguing about the next hot AI stock, Buffett was quietly building the foundation for the next era of Berkshire Hathaway's wealth. Simplicity, patience, discipline. That's the formula. It's always been the formula. And it works today exactly the same way it worked in 1965 when Buffett bought his first share of Berkshire Hathaway. The question is, are you willing to tune out the noise and follow the principles that have created more wealth than any other investment approach in human history? Warm, authentic, genuine connection, not salesy, real. Listen to me. If you've made it this far in this video, you are not an average investor. Average investors clicked away after 30 seconds. You stayed. You listened. You thought. That tells me something important about you. It tells me you're serious about your financial future. It tells me you want real analysis, not clickbait garbage. It tells me you understand that the difference between building wealth and losing money comes down to the quality of information you consume. This channel exists for people like you. Every single week I break down the moves the smartest money in the world is making, deep geopolitical analysis that connects to your portfolio, China intelligence that mainstream media won't touch, strategic frameworks that give you an unfair advantage. This is institutional-grade analysis delivered directly to you. But you will never see my next video unless you're subscribed. YouTube's algorithm only shows you content from channels you follow. So here's what I need you to do right now. 1. Hit that subscribe button. It takes half a second. 2. Tap the bell icon for notifications so you never miss an upload. 3. Share this video with one person who cares about investing, about their future, about understanding how the world really works. Because in a world full of noise, clarity is the ultimate competitive advantage. And that's what we build here, together. I'll see you in the next one. Stay sharp, think long-term, and never stop learning.